Here's a good example of Head and Shoulders over the course of the entire pandemic. It just works best. It allows me to do other things. I don't have to be babysitting every single tick. In Trade Ideas is probably one of the best tools that any new trader could get familiar with.
Welcome to Talk with Traders. Today I have with me Steve Gomez. How are you, Steve?
Good, Brad. How are you?
Good. Just wanted to take some time today, go through your trading style a little bit, see what cues you're looking for in the market. So let's start with your background.
Background, I've been trading markets since 1995, so over 25 years. Started trading stocks exclusively in 1998, which is where I met Dan and Phil, who did create the Trade Ideas platform. So because of that, I'm the very first beta test user in the database. I'm user number 3, which is kind of a nice little feather in the cap. So over the years, I've developed a style. I started off as more of a day trader, a scalper, but since about 2007, 2008, the market's changed a lot, and I find myself being much more of a swing trader. It just flows with my method and my speed. Swing trading is basically taking risk home overnight. You're assuming the risk overnight. Anything can happen, news or backdrop or market going up or going down against you. So you assume that risk overnight. And a perfect swing trade for me is something that I might sit in and anticipate for a day or two. Then it begins to make its move. And as it's making its move, I'm slowly fading out of it, maybe over the course of a day and a half or 2 days. So that's the perfect scenario for me. And it just works best. It allows me to do other things. I don't have to be babysitting every single tick, which is what a day trader usually does. Barry, for instance, has a great trading room here at Trade Ideas, and he is a straight-up day trader. He's in, he's out, he's in, he's out, and he typically doesn't like to take home risk overnight. So that's really the primary difference between a swing trader and a day trader. I might enter a swing trade with anticipation that it's going to go in the direction I want. And that could take 2 or 3 days of just being patient and letting it, wiggle back and forth. Then once it breaks out and starts getting volume and running and it's in the momentum mode, once a trade is in momentum mode and I'm making money, I'm probably going to be trying to get out of at least most of it after a day and a half. But I might let the remaining 1/3 or 1/4 run for another week as long as it's behaving. But trying to get a full position to run in your direction for 5 to 10 days in this market is very difficult. This market is 3 steps forward, 1 step back.
Of course. And it's a perfect segue into your daily activities or what you're looking for in a setup. Start your day off for us as a trader.
Well, my day actually starts the day prior. What I tell people, my swing trading decisions, my risk management decisions are based at the end of the day. So in other words, if I have a few positions, just these are simulated positions here, but I might look at the end of the day and say, we've got 5 minutes to the close. Which one of these looks like it might not be holding on to the levels I want? For instance, this DWAC right here, I'm going to stay in it as long as it stays above these 2 moving averages. So I'm in kind of wait and see mode. At the end of the day, if something looks like it's going to break down and post an ugly candle that everybody's going to be looking at on their daily charts that evening, and that's a stock I don't want to be in for the next day, I will get out of that trade before the bell and not even risk the next day. Many times if I see something I like, I might even get into a trade at the end of the day and initiate a position and take the initial position overnight. It really depends on what the chart looks like, and what I'm always looking for is consolidation. I don't like to chase a lot of green candles. I look for something that's a strong stock that has consolidation. One of the examples I would use is my A table. This is a scan right here. It's designed to find short squeezes, which means stocks that have too many short sellers in there. And if they're losing money, they're going to have to get out by buying the stock back. And when they buy the stock back, they're competing with other people who want to go long, and it becomes a perfect storm that we call a short squeeze. So this A table essentially looks for stocks that have a good chart, but have a lot of short sellers. Arch Coal, for instance. This one is at the top of my list. It's got 15 million shares in the float. That's a very small float to be trading, not a lot of stock circulation. But of those 15 million shares, 34% are on the wrong side here. They're holding short. So that means if they want to continue to get out, the price of Arch is going to continue to go higher to accommodate them buying stock to get out. So these are the kind of setups I do like to look for, but I just don't like chasing a lot of green candles. I look for consolidation.
Right. You don't want to buy after something's popped and everybody's heard about it. You don't want to rush in.
Like I said earlier, 3 steps forward, 2 steps back. Be the person buying that 2 steps back or that 1 step back, and then participate in the next 3 steps forward. I took this snapshot this morning of my sector watch list. These are all my ETF sectors. And the important thing is change from the open. And so I take that and I run what we call a stock race based on change from the open. And I can quickly see in this moment in time, and again, I'm doing this in the first 10 minutes of the day, what sectors, once the bell rings, are taking off and where the money is immediately flowing. So I can do a top-down approach, and I could notice that, this morning gold and silver and solars were kind of leading the pack, and that will help focus my attention from a top-down approach as well in the mornings.
You explained it a little bit, but do you have any stocks you can pull up that are good, head and shoulders, cup and handle?
Yeah. We can look at the daily chart of the S&P, which is right here. There's a good example of head and shoulders over the course of the entire pandemic. This was our pandemic down here, and we had a nice run going up into it. A great example of consolidation I can give you was a video I did on TikTok the other day, and it was a bearish call. Okay, here we go. We're going to get into it. This is the NASDAQ QQQ. They couldn't hold the 200-day moving average, and then they got stuck here multiple days at the 50-day moving average. And the video I made and what I called out was this: consolidation. This was consolidation at a key level, which unfortunately was not strong. It was a weak consolidation. It was being held down by our 50-day moving average. So if you flip the charts upside down, it's the same thing going long. But in this particular recent case, I made a bearish call on the market saying, watch out below. This consolidation here looks like it's ready to maybe continue in the same direction. A good example on the upside, BTU, for example. This was a beautiful consolidation. Back here, for instance, we had a lot of movement up and then a lot of consolidation sideways, respecting on top of the moving averages. So consolidation on top of or above moving averages, I expect a move to break out. Consolidation under the moving averages is just another early warning system that we might be ready to break down.
So the consolidation, it broke up, but then it came back down in a down market. Of course, you can't control market conditions.
And Brad, here's a perfect example of my theory. 1 to 3 days is about the most you get. That's good movement right there. Once that is over, the price action just kind of breaks and looks to reset. So I'm always looking for strong stocks that are consolidating 3 to 5 days in a tight range above a key moving average. That's always a good one.
And then just for the people that are using trade ideas or new to trade ideas, but anything you'd like to point out about the application specifically?
I do. I would like to point out this right here. This is the Trade Ideas Sim Trader. All right. Trading and golf have a lot of similarities. The golf gods and the trading gods share the same office space, I'm convinced, and they have the same sense of humor. And so if you're going to be a good golfer, you're going to have to spend some time on the practice range. There's no point in just going out there and hitting the ball and losing money, especially if you're playing for money. We have a practice range right here for you. Configure the stocks, the symbols, and the scans you want. You can look at the charts you want, and you can say, okay, I'm going to take a educated guess here. I'm a new trader. I'm starting to learn and get the feel for the ropes, but I'm going to use a simulator rather than my own money, because everybody that starts out trading is going to lose money for probably 6 to 9 months. It's just a matter of how much you lose and how risky you want to get. So if you can lower your tuition costs by trading for free using our simulator, and then slowly legging into 50 share, 100 share sizes, and getting your sea legs slowly. It's the people that jump into this that have been successful in other businesses that think they can just accelerate quickly in this as well. They get hurt pretty quickly because they're not respecting their time of education. And that time of education, again, is your tuition. Everybody's going to pay it. It's just a matter of how much you're going to pay and how you approach it. So to answer your question, the Trader Simulator in Trade Ideas is probably one of the best tools that any new trader could get familiar with. I was thinking, again, I mentioned Barry Anderson is live every day from bell to bell, but afternoon, 12 Eastern, one of the 5 of us here will take over and give him a break, and we come into the YouTube live feed and show our desktop and start talking about our method. And so every day at noon Eastern, you can get a different trader employee / here at Trade Ideas to kind of show you how they use the product, how I use the product, answer your questions about the platform. And that is designed to, again, shorten your learning curve. If you're just going to try and go into a dark corner and figure this out on your own, it's going to take a while. Just recognize that we've got a lot of information, and a lot of our time is given to the new traders to try and help them learn as quickly as possible.
For sure. And we even have a new product coming out, I believe, that you're going to be one of the people contributing to, Trader's Eye.
Right, the Trader's Eye, what we're watching. There's only 2 stocks in there today, but the idea is Andy and myself, we're double curating it. So it's a good what we're watching symbol list. There's no need for configuration from the user. They can just see the symbol and apply their own risk management to the symbol they see that comes through.
The trading eyes for the guy who's got a job that he works full time and still wants to trade.
Yes. Yeah, he could look down at his laptop or wherever. Eventually, we'll have this on the phone, of course, but look down and say, oh, this thing just popped up. I'll log into my E-Trade account while I'm pretending I'm on a sales call here, and nobody will know, and I'll just manage it from there. So it's a slowed down process. It's not a day trade. It's not a scalp. It's something to just put on people's radar to help them maybe get in the right direction and start learning trade management.
That's awesome. So, Steve, thanks for your time today. I appreciate it.
Mm-hmm.